go.
All right, we should be live. Hey guys, welcome to another stream on the Financial Summit channel. Hopefully we're live. I'm waiting for it to show up. We are testing out Restream, hence the little bit of delays. And okay, we are live. I'll rewatch the beginning just to see if I started at the right time. So finally, we're getting off Zoom, and this is pretty much our first test run. So let us know in the live chat if the audio is good and the video is good. And welcome Mark Wood to the show. Hey, Mark, how you been?
I've been good. I've been really good. Just hanging out, and we've been in a lockdown-free zone up here in the north. Kind of wish I was back down in Florida for January and February, but this is where I am. It's my camera's a little bit blurry, but it's on and I've got it dialed in, so you just have to deal with it for now. It might be a setting. Yeah, so we're using a different format, so there might be some just little glitches here and there until we figure it out a little bit more smoothly. And I am having to use my computer audio. For some reason, the webcam mic is just creating an echo. And couldn't figure it out.
Mark, your audio is really low. I'm gonna try to turn it up from my side, but people, your audio, it was good like right before we went live, and now it's like choppy and a little problematic. Try saying something else.
I'll just try to get a little bit closer to the mic and speak a little bit louder. And yeah, I can't see a setting to bolster the mic settings in here.
No, I did that already.
Okay. Okay. Well, if it's still hard to hear, let us know. Okay. And I see that Ferrari. I did change my mic. I changed it for some reason. The webcam mic was worse than the internal computer. It was creating an echo, and I don't know why that would be.
Where the fuck is that coming from? Hold on.
What are you hearing, Tony?
Sorry, I have like some kind of audio playing randomly on my end. Okay, Mark, let's try again. Your audio is really, really off. Is there anything you can do to change your mic?
Let me just try this, but I don't think it's going to be helpful.
It might be better on the live stream. Is this better or is this worse?
I think this is better.
Is this better? It's better? It's not?
It's better, but you're getting an echo.
Huh. I don't know why. I don't have anything. I don't have anything open that I know of that would create that.
It's like a stutter kind of thing going on.
Let's see.
Switch back to the computer mic or the webcam mic.
Okay.
Here's the computer mic. Built-in computer mic.
All right, so we'll have to do it this way then.
We'll do it for now. Maybe I'll try to experiment with one. I don't know why this format would have an issue with that other mic, but
right. It's like people say it's good enough, and some kind of content is better than no content. I'm just gonna do my screen share real quick. We did a show this morning. I'm just gonna take a look at the charts for 5 minutes, and then the floor will be yours, Mark.
okay.
Here are the two trend lines I drew this morning with Matt when we did our show this morning. And we were sitting right at this bottom trend line. And I said, we need to imminently start to rise. There was a crazy hour right here with the Fed announcing that they're not going to alter interest rates. The Bitcoin market crashed about $2,000 or like $1,500. And then it went all the way back up. and we reached a high of almost 105,000 a few hours ago. We've now pulling back. I am pretty bullish here. I needed the daily candle to rally and close above 102.5. We are very close to closing the candle. There's only one more hour to go. I am expecting us to close there. We have generated a brand new swing high. We are generating a new close, which is going to be more than halfway up the big red candle that we had back on Sunday. And to me, this is very, very bullish. The only thing that is missing, of course, is another green star candle on the daily, which we could get very, very soon. We need 2 more days. So the next candle would be the price flip, and then the candle after that is a green star candle. If that green star candle comes in at around 105, 106, that creates a very, very bullish scenario to where the weekly chart is also very, very clean. So I do like this look here. And if we can close at a brand new weekly closing high this week, I would consider that incredibly bullish for the rest of the month. So that's pretty much my look. Oh, interesting. Hold on. I could do, oh, perfect. There we are. So we could do the chart, but the chart won't be as big. So I'm going to play around with these settings now that I'm learning how to use Restream. And let me turn off my screen share at this point, unless you have questions for me, Mark, that you want me to pull something up.
I don't. Well, actually, go back to the daily chart really quick. Okay, it's not there. Well, there was one chart.
What is that coming from? 1 second.
Yeah.
Sorry. Are you hearing like some random sound or no?
I am not.
Hmm?
Your audio is really clear on my end.
Okay, so you didn't hear. Okay, so there wasn't. Yeah, because I don't know. Anyway, never mind. Okay.
No, that's not what it was. There is an MRI acceleration on one of these time frames at right around $110,000, and I believe that once that is picked up, the price is literally going to accelerate.
Yeah, that's on the weekly scale. Right there.
Yes.
Right, so that's a really good MRI acceleration line. Once we break that, I can see us easily going up to 120, 125.
Yep, I agree with that.
Okay.
You froze up a little bit. Tone is frozen. Okay, so while Tone is trying to unfreeze, let me see if I can get my chart up. So, should be interesting. So, Tone, I am having some issues just like figuring out how to. Oh, I can see that Tone frozen. How do I actually access this chart once I have it pulled up? I'm confused by that. Tone disappeared. Okay, I want to show this chart. However, I do not know how to actually get access to the chart to like change my drawings and whatnot. I'm gonna have to figure that out on my own. But ignore all the mess, because there's something really important happening. I don't believe we cover this on any of the recent streams. However, where my arrow is, hopefully you can see it. I'm pointing at the cross of the purple 200 EMA crossing back above the 200 SMA on weekly. So now this has only happened a few times. And remember, Tony and I have discussed EMA, SMA crossings. I track the 55 pretty regularly when they cross. And when you get the 200 EMA crossing back above, there's tone. When you get the EMA crossing, yeah, you're back. You're back. When you get the EMA crossing back above the SMA right here, which I'm showing taking place a few weeks ago, that is potentially mega bullish. And Tone, I have a quick question for you. When I have this web page, when I have the screen share pulled up, how do I actually get on it to like turn off the drawings and trading view on them?
Sorry, turn off the drawings?
Yeah, I don't need the drawings on here, but I can't actually find this.
Oh, there on the left side, you see the magnet. You go 3 down, and you click on the eye.
Yeah, but what I'm saying is like I can't. I have my screen shared, and I've got the screen pulled up. I can see it. However, I can't get onto it to edit it.
Why?
I don't know.
No, but you should be on Trading View, right? Like you're sharing your screen. You shouldn't have Restream in front of you. You should just have your screen in front of you.
Well, I have. Okay, here we go. I got you now. Thank you. All right, here we go. So now we don't need okay. All the. I don't need these drawings at all. So let me just hide those.
So click on click on that. There you go.
Okay, there you go. I got you. So now this is this is one of the most important things that I'm seeing in the charts right now, and I'm going to show you one bearish argument that could potentially pull the price back down to 90K, but it would only be a massive buying opportunity in my opinion. So now I'm going back through here, and I am on the index. So in theory, even when this when these two moving averages initially formed, they have to look back 200 periods, and I'm on the weekly. You already had the bullish cross. You already had the EMA accelerating above the SMA, and we can see what happened. That basically, from where these MAs generated each other, that basically took the price from $150 to $1,200 to that bull market top. And then you can see here, as I just scroll right, we have this massive descending bear market, and the price basically based off of the weekly 200 SMA, which was very relevant in Bitcoin's history up until the last cycle. But then let's look forward, because this is where I think we are potentially. Here is that same cross, and I want to show this. Right here, February 2020. Here we are about to hit February 2025. So 5 years later, fresh cross. But here's the important thing. Look what happened. And this is very common. This is very common. Whenever you get 50 EMA crossing 50 SMA or 200 EMA crossing SMA, it's a bullish cross, but you can very often get a correction, and it dropped right down to the weekly 21 EMA. So this was a significant drop. This was 35%, I think. Yeah, one of those 35% drops. Now I'm not calling for that, but what I do want to show is that we've only had this cross a few times. The next time it took place was basically, in theory, even with the COVID dump, these never really did cross bearish. If I zoom way in, but it's close enough. This is close enough for me right here. This is taking place in October of 2020. And we can look and see what happened once the purple EMA started accelerating above. And more importantly, in both scenarios, the SMA was also curling up. So now in 2020, that took place with the price sitting right around this $12,000 to $14,000 price range. And that cross extended the run up to 69.70K. So here we are in 2025 with a fresh cross. This cross took place in early December. Okay, now it's possible that right here, this drop to 88K was will be considered the drop in the test of this cross. But what is more important to understand is that this is a fresh cross, very, very fresh cross, which if we refer back to the last stream I did, I talked about the 2-month candle closing above the top Bollinger Band, which also was a potential very, very early uptrend expansion sign. So, do you have any thoughts on this idea, Tone? Let me get it back.
No, I'll just let you keep speaking. I was gonna mention that you have a Telegram channel that we forgot to show in the beginning because we were dealing with some technical difficulties. So I'm gonna pull it up right now.
Okay.
So this is a QR code people can scan that are watching. So go ahead and scan that QR code. This is for this is going to be a Telegram channel where Mark is going to post his signals. This way you don't have to wait for a show to get his thoughts. You can just get them right from the channel, and I'll let you get back to it, and I'll pull it up again later on.
Yeah, we just figured that since I'm not on here regularly, but I am in groups checking out charts and whatnot. We're looking at this every day. I do intend on just putting some general ideas down in there. So check it out. It's early in the works, but it's running smoothly so far. And please give us any feedback on that. So Tone, yeah, this is let me get back to where I am on here. So this is, in my opinion, this is bullish. This is suggesting that weekly is just starting to get momentum back on the time frame after all of this sideways consolidation, weeks and weeks and weeks, literally 3 or 4 months or longer, March until October. So that allowed the purple EMA to eventually catch up and cross above. So remember, the exponential moving averages are always going to reflect the more recent price action. So with this, it's basically showing us this move from these lows of 55K up to 103 is now starting to get reflected in the EMA right here. So I'm thinking that Bitcoin is ready to expand into the uptrend. And let's just talk about some historical facts. Typically, generally speaking, February is one of the most bullish months for Bitcoin. It's almost always green. I don't think it's 100% green. I think some of the bear market Februaries were red. Lows typically come in fairly early in the month. So any dips, I believe, should be buying opportunities. And another thing I want to say is, for viewers out there, one of the things that I try to do, and I think Tone is also very good at doing on a show with Matt, is just identifying levels. And oftentimes I will use moving averages to find levels, or I will use Fibonacci's. But if you understand about 3 layers up and 3 layers down, then you will start to formulate really strong opinions on, if the price does this, then it is more probable to do this. We don't know. We literally never know. Like, I have no idea if Bitcoin is going to take out this high. Right now, it's looking pretty good, but I don't know. I can use TA to bump up the probabilities of all that. So what I am seeing really quick, let me just show this on the 12-hour chart. It is a bearish cross. So even though we have this nice pop up here, we still have not seen the price print a significant higher high after kind of starting this small little downtrend on the 12-hour chart. So now what I'm showing you all is the 200 EMA has crossed below the 200 SMA. And I can just show throughout history, in recent history, what has happened when that cross has taken place. Here's the most recent cross in May of 2024, and we can see very easily, as the price was dropping and making strong bounces, it eventually did pull down into this cross and actually saw lower lows. So there's one example. Here is another perfect example. This is June of 2024. Basically saw a drop from 49K all the way down to $38,000 as this cross was forming. And its support, this is always going to be an area of support until the black moving average gets flipped to resistance, the 200 SMA. All right, and I'll show one more example, maybe two more examples right here. This is going back into 2023. So I kind of have to put a probability on this to say that there's a decently, now these are not always 100%, just because those moving averages cross doesn't mean that the price is going to get pulled into it. But here, look, here's the 69, here's the initial 65K top. Same thing. Here's the drop, strong bounce. So this is April 2021. Drop to 50K, strong bounce to 57K, and then to the cross and eventually lower lows. So I am cautious, but even though I feel like there's a very high probability that the price is still going to get pulled down to these moving averages, they are going to continue to climb with every single close. So the test might happen much higher at like $95,000. So now this is another thing I like to do. I like to look. So now I have a level. I have a clear level at $91,900. This is a really important cross to watch. So then what I start doing is I start poking around different time frames to see if I can find any information that agrees that this might be an important level. And if I go to the weekly chart, I get it right away. Okay. Now going back to 2016, and I'm going to go right back to this cross we discussed a few minutes ago. The drop was right into the 21 EMA on weekly, right here, $940 plus or minus, and that was a buying opportunity. So, where is the yellow MA right now? It's sitting at $88,100. And it will be rising. This moving average is rising at about $2,000 a close. So it's going to be close to 90,000, 91, 92,000, which when I go back to the 12-hour chart and look at this cross, 91, 92, boom. So now, now I have confluence in this price range. And I guess there's kind of a simple Tone had a trend line drawn. I have something I've been looking on this chart. Let me see. Yeah. So I had a triangle drawn, and I'll adjust this now. So I do believe I will make the one bullish argument I have off of this. This is a perfect, so far, bump and run. Okay, here's the drop. Here's a significant drop. Then you get the move above this decently long trend line, a test of the support, and one more test of the support. It's really common to see maybe even 3 walks down, but as long as this trend line holds a support, it legitimizes the breakout. So there is a chance that that's it. Right here was the test of the cross at $97,000, $98,000. But I believe we need to start seeing 12-hour closes back above at minimum these closes at 105, 106K. Do you have any opinions on that, Tone?
No, yeah, I agree. I was about to answer someone in the live chat who's asking if the cycle could go into 2026, and the answer is yes. It depends on how fast we go up. Very slowly, then we can easily keep going into 2026.
I totally agree. I'm still kind of standing with the cyclic ideas because we haven't seen anything yet to show us information against that. But with this fresh cross in place, and here's another simple look. If I pull up the monthly chart, and we just need one moving out.
But Mark, isn't that cross kind of bearish?
No, not this one. Because Tone, this is.
Oh no, that one is bullish. No,
yeah,
the other
that's
one.
what I was explaining. The 12-hour is bearish. The 12-hour is telling me to not trust this bounce. This could very well be a bounce to a lower high, up to 105. It might even take out some shorts a little bit higher than there, and then turn around and take out some longs. yes, this is a bearish cross tone, and every single example I've shown tests this cross going back a good way. So it would be an anomaly for the cross not to get tested. And like I mentioned, these moving averages are going to be rising. So real quick, let me just go back to the monthly chart, and I'll show one moving average. We really only need one moving average to tell the whole story, and that's the 8 on monthly, 8 EMA. And once again, we will go back and take a look at the cleanest market asset market in probably the history of assets. So this is the 2016 bear market. We can see right here, after this spike high in November of 2015, we weren't quite sure. It was a higher high wick, but no real closes above a higher high yet until maybe the next candle. But this is a very bullish thing I look for. Now you've got the orange moving average trending up and price running sideways into it. That is one of the most bullish signals that I look for, is price running sideways into an uptrending moving average. It doesn't always work, but it absolutely has the potential to launch the price. And from here, we can see once it finally ran sideways, it took the price from 450 bucks to 800 for an 80% move. So now let's go forward into 2016, and we can see 1, 2, 3, 4-ish, 5-ish, 6-ish touches. So as many times as this moving average gets touched in a bull market, the more likely it is to sustain the run and hold. Now, it got tagged here and showed us a nice reversal candle, but right in February of 2018, it's closed back at 10K with the potential to reverse the market back to the upside. However, 1, 2, 3 closes below it, and that basically certifies we're in a bear market. So let's and here the 2021 market is really important to study because the price ran away from the moving average. Like basically, nice base trading sideways into it. We got a nice pop from 10K up to 14. Bit of a touch. Now in November of 2020, the price starts running away from the moving average. So once there's finally a strong drop, it's not support because it hadn't been tested throughout this entire run. So let's take a look at current price action. I like what I'm seeing here. I actually do like this. Perfect where I'm circling my cursor, basically from the first close above the ADMA in January 2023 until October of 2023. All of this price action surrounding this moving average. 1, 2, 3 closes above, and off we go. Now, this is the other bullish scenario. Trading sideways or down, that kind of makes a wedge, a broadening wedge or just a descending wedge into an uptrending moving average, has the potential to do exactly what we saw. So this moving average is currently running about 5,000. No, it's more than that. This was 75,000. This month is 80,000. So yeah, about 5,000 a month. So this is going to be trending up to 86,000. So now we start getting into that key $90,000 range again. A test. In other words, what I'm saying is that a test of 90,000 and holding would be mega bullish, in my opinion, especially with that fresh cross that we just saw. So real quick, let's just take a look at the 4-hour chart. And all I need to do is click on bands. All right. So here we are, right at the top band. And if I put the yellow moving average on, I'll get a better idea. Okay. So now this is bullish, The 8 has crossed back above the 21, both above the middle band. That immediately puts a target on the top band. So let's really quick before we bolt out of here. The monthly ends. The monthly ends in 2 days. Now, if it's above 104.5, well, it still doesn't completely negate this potential topping candle. It doesn't negate it, but damn, is that bullish in my opinion. It just means that the probability of the price looking higher in February is very high. So this is about to put in the highest monthly close in 2 days. It's looking pretty obvious. Now, another important thing to consider is CME weekly. I know not a lot of people pay attention to the CME chart, but this to me was really bullish. Last week closed on a high close. It was the highest close in Bitcoin history. So this is keeping me bullish as long as the price is crawling up 100K and holding closes above there on a weekly basis. I'm bullish, but there is a warning sign right here at $89,000 with the 21 moving average dropping below the 18 SMA. So what this tells me is to be cautiously bullish. And I'm showing 3 or 4 different things here to show we could still see the price turn around the 90K. What do you think the probability of that is, Tony?
The price turning around and going to 90? Well, look, the chances that we go down are always high, but I don't like the number 90. Like this is, and we talked about it this morning with Matt. 90 is the last place I'm buying Bitcoin. I'd rather buy Bitcoin at 110 than at 90, because if it goes to 90, it's going lower, in my opinion.
I understand that sentiment. In fact, I kind of made the same call with a friend of mine, saying it's actually less risky to buy Bitcoin above 110 than this last drop we had. Being said, I did buy a little bit of spot on this dip, and I will show why. Now, if I switch to MSR, are you seeing the dark screen right now, Tone?
No.
Nope. Okay, I think I need to pull it up.
You have to switch screen shares?
Yeah, I think so. Let me see.
Okay.
Here's right here. Okay. Yeah, and before I show Bitcoin, I just randomly do have this pulled up. I think it's important in light of the Federal Reserve meeting today. Tone and I were kind of chatting prior. We tried to do the stream a couple hours earlier, but I was tied up. Basically no change, which makes a lot of sense. But one thing that is interesting, there are a couple things that are interesting, is the Bank of Canada. Not that we give a shit about that, but the Bank of Canada has basically claimed that they're putting an end to quantitative tightening. So they are looking to move into easing. The other thing is Fred Powell said inflation rate does not have to be at 2% in order to cut rates. So in my opinion, he's kind of hinting at potential rate cuts in the next session. The inflation rate currently is 4.1, and maybe has formed an M-top and trending back down, but it's still pretty high. I would have been very, very surprised if they did cut the rates today. But the one thing I did want to show is going back to this chart. This is the 2-year yield. And we'll discuss this as it becomes more relevant. Basically, these major peaks have led to pretty sizable stock market corrections. Right here was the 2020 correction. It was not this was not the COVID crash. It was this capitulation once these lows were taken out. And Tone and I have discussed this in the past. Right now, I see stuff on Twitter. I see people talking about stock market crash, and man, I just don't see it. Like, this is sideways, and it's literally sitting in the middle of the range. I get concerned for a major stock market correction if and when these lows at, like, let's just call it 3.45% get taken out. Then that begins to confirm that this 2-year yield, bond yield, has topped out, and then we can start to look for a correction. But we also would probably be in some kind of quantitative easing. The printers will go on, the markets will scare, and it will be a buying signal. It's just how much is the market's going to drop? I don't know. None of us know that. But let me just show really quick what I was watching with MSR, and one of the reasons I love this. I'm going to go to a random hour that not very many people look at, but it's something I watch ish. I watch another time frame, but this one works just fine too. So this is the 3-hour chart, and if you understand MSR, this shows that I have that same bump and run pattern right here, and this shows a perfect tag of it. But what's more important is, now mind you, this is a low time frame. It's only the 3-hour chart, so this is a fresh bullish trend. When you see the gray above and the blue ocean below, this is a fresh bullish trend. On 3-hour chart, anytime the price dips into this blue dotted area called the buoy, it becomes lower and lower and lower risk. And then if your oscillators are happening to line up, like the RSI was at 22, and the EXA, this is Socrates' Fisher oscillator, was at negative 2.76. So I bought here. It was just a spot buy. It wasn't a trade. It wasn't leverage. I just closed my eyes and smash bought right around the 98. It was actually around 98 too. And it was just based on this, watching this play out over and over and over again. So now what I'm seeing on MSR is bullish. You can see a walk up. I'll put it on 4-hour, because 4-hour shows something pretty clean too now. So 4-hour, I was considering that we would be potentially on a W bottom. And I know Tone doesn't like double bottoms, but I don't think of it as a double bottom. This is a W.
No, it's not. I don't even consider it a W. A W to me has an equal bottom. This is just a higher low.
Exactly. So when I see that with a nice higher low, that does confirm. I do believe this higher low has confirmed.
It definitely confirmed with today's candle. Well, yesterday's candle close and today's candle. Well, sorry, these aren't daily candles, but
it's 4-hour candle.
Yeah, it definitely confirmed with the prior candle's close.
Yep, I agree. So I was watching this. In fact, I sent a message to a friend. I said, okay, this is right here on January 28th at a price of 100.3 is either the lower high, which would help confirm these lows, or we're going to see a dead cat bounce somewhere up around this horizontal resistance in the 105K range. And then MSR is showing us one other important thing. These red dots and green dots are kind of like Tone's MRI accelerations. They are strong resistance and strong support until they're not. And this has flip-flopped several times. And currently it's resistance, and it's doing a pretty good job. This candle has 22 minutes left, and a close above this resistance, which is basically sitting at 103.8, I think that would be relatively bullish, and I would look for the price to continue to trend up here into 105. So I like this. I like this structure. I like what I see. There's one thing I wanted to show really quickly on the Ichimoku cloud. So let me try to pull that up. If I can find it, here it is. Okay, so when I put the drawings on, two big arrows are going to pop up. And I need to put this on daily. This is the weekly chart. Okay, I have been looking at this current price action as similar, a fractal. I'm not a huge fractal fan, but I'm a chart pattern fan. And when I see patterns playing out over and over again, I start to utilize them to my advantage. So I just see this breakout. This is why I have the blue circle in October of 2023, breaking out, just slowly drifting from 35K up to 40K and then popping. Very similar to this consolidation here in 2024 in the 70K range, which drifted up and popped up. So now, the reason I have these two arrows is because this got a nice dip into the cloud. While the TK cross was still bullish, Tenkin and Kijun, the red is the Kijun, the blue is the Tenkin. You want the blue above the red, and so right here, I am giving slight consideration that this little dip right here, this 89K dip into the cloud, was that move, was this same move back here. And now we're seeing, now we have to wait for these highs to get taken out. So we're waiting for these highs to get taken out. So this is potentially bullish, something that I'm watching on this chart. And if we look at the 4-day chart, which I like 4-day and 5-day based on Consensio and other reasons, this dip is, the last couple of dips have taken place right around the Tenkin. And if we go back and look at 2016, 2017, with this setup on 4-day, basically any dips in between blue and red, 1, 2, 3, 4, 5 examples as it climbs up. So this drop right here for me is perfect. I'm happy to see that drop. This wasn't on the recent low. This is on the low down to 89K. And then this low tagged the blue. This suggests that even a drop to 80K is fine. I don't really want to see 80K. We need to see this starting to drift up. But this is all a very bullish look. Now, really quick, I wanted to talk about the Federal Reserve meeting. So hold on a second. I'm going to stop sharing my screen real quick. So Tone, give me your opinions. Tell me your opinions.
On what?
Just on the meeting.
Oh, I didn't see it.
I didn't either. I just read.
I'm so busy with the financial summit coming up in 2 weeks that I watch the press conference and stuff, but no, I just saw it. I knew they weren't going to change the rates. There was like a 99.5% probability that they were not going to mess with the rate up or down. So I didn't expect it to be very eventful. There was some volatility in the Bitcoin markets. I actually have no idea what Powell said. I'm waiting for Powell to be fired by Trump. And I think the only way he's not going to be fired by Trump is if he lowers interest rates. Maybe that's the reason why he came out and said that they don't need a 2% inflation target in order to lower interest rates. You have to realize that people have to realize that the financial markets are addicted to low interest rates. It's like the biggest junkie in the history of, heroin users.
Yeah.
And that is the American economy and its addiction to low interest rates. Now, low interest rates are very, very bad. And I've explained on multiple occasions why they're bad. First off, I'm watching us on X and my video is very rainy. I don't know why. Anyway, it doesn't matter. So yeah, we're streaming at 1080, so that's kind of weird. How's my video on YouTube, guys? I mean, it's clear in here, but I don't know.
But it's
Maybe
a
we
little
better. Weird. So the U.S. economy is addicted to low interest rates. It's blurry on YouTube as well. Interesting. That I don't understand why. Anyway, well, it is what it is. I don't know why it's blurry. I have no idea. So it's addicted to interest rate for two reasons. One is it creates a significantly lower burden for the national debt. The national debt is now 35 trillion. Out of that 35 trillion, about 28 trillion of that is cumulative interest. Like at least 25 trillion out of the 35 trillion is cumulative interest over time. That means that if the US government simply printed money and not borrowed it into existence, the federal debt would only be 10 trillion or less. It wouldn't be 35 trillion. And the government never pays back the principal. The only time the government had a surplus in the last 40 years was at the height of the dot-com bubble in the late 90s during Clinton's time. And not because of anything Clinton did with the economy. It's just because all of these high-flying tech stocks were paying so much taxes that the government was able to profit on a yearly basis. Let me pull the charts up. I'm going to open my screen share, mine as well. Have my screen share open. Maybe I'll open the yield curve and we can talk about that as well. So you can see right now that the interest rates are actually rising. The federal funds rate has fallen, but that's the black line. But the interest rates are rising. So I don't understand how Powell is going to be able to lower interest rates when the pre-market, the free market is pushing the interest rates up. So like I said, the main reason why the federal government wants a low interest rate is so that the federal government has a smaller burden. And I have all the data here. And this is my treasury spreadsheet and debt held by foreign nations. And the most important line item in everything is right here, the net interest, this net interest. And you can see the expectation. Where are my numbers here? It's in my raw data file. I got to update these. I just haven't had the time, maybe after the summit. So you can see how this is the latest expectation. And next year, it's already going to be pushing $1 trillion. But if they lower the interest rates down to like 1%, then it goes back to significantly lower. And this is the one line item that goes up exponentially for the government to manage the economy. This you can see right here that it's already as high as the defense budget. The defense is 874 billion, and so is net interest. It's pushing on $1 trillion. You always have to look at net interest, not interest. Interest is way over $1 trillion, but net interest is the actual burden. A lot of people are confused on what the difference between interest and net interest. And most of the headlines that, oh, the government owes $1 trillion in interest payments, they are kind of lying because the government only owes net interest. And I'm not going to get into the reasons why, but I did the research and I know what the differences are. Most people do not. Even people pretending to be, financial gurus have no idea of the difference between interest and net interest. Now, the second reason why the government wants a really low interest rate is because it allows wealthy individuals and wealthy institutions to borrow money and pump the financial assets even more. You have to realize that if you take someone like any US government representative, we can use Nancy Pelosi, she's the greatest trader in history. And everyone, whether they're politicians or whether they're people saving for retirement, everyone is invested in the stock market. And the stock market is addicted to low interest rates as well, because at low interest rates, companies can borrow money cheaper and they can use that money to pump their companies. They can make their companies better, or they can just buy back or buy their stock or buy other people's stock, and everything goes up. Number in the stock market goes up. So this is the main reason why you want low interest rates. Now, low interest rates are very dangerous for the economy for multiple reasons. One of the reasons is senior citizens depend on fixed income, and they put their money in CDs, they put their money in bonds, and financial advisors don't put senior citizens into risky equities. They put them in safe government treasuries or other forms of interest-bearing debt. And that interest-bearing debt doesn't give you anything in a low interest rate environment, which we've been in for like 20 years. And that's why senior citizens are hurting even more now than ever before. Now, the second reason why low interest rates are very, very bad is that lowering the interest rates helps stimulate the economy when the economy runs into trouble. But if you have a perpetual low interest rate environment, the Federal Reserve doesn't have that tool to stimulate the economy in times of trouble. Kind of like, if we have a big natural disaster or if the economy hits a recession or whatever it is, right? Without the tool of lowering interest rates to stimulate the economy, the government has to defer to its next option, which is straight up printing money and handing it to people. But when the government prints money and hands it to people, it creates a bigger burden of the national debt, hence creating a higher interest on that debt cumulatively over time. So the government only hurts itself and its senior citizens that help build the country what it is today by lowering the interest rate. And this is a battle. And as long as Powell continues to lower the interest rate, Trump's not going to get rid of him. But if Powell raises the interest rate, Trump will likely fire him. And yes, Trump can fire him, contrary to what Jerome Powell thinks. And Trump can easily fire him and replace him with someone that's going to be a Trump yes man. He can do that. All right, so that was a diversion into the interest rate stuff. What was your exact question, Mark?
I don't know if I had an exact question, but that actually was a really good breakdown. I guess what I'm saying is, you're right. Powell claims that he can't be fired by Trump. However, Trump has publicly said, I want the rates lower. They held it now. But at the same time, Powell kind of bent the knee and said, but that doesn't mean by any chance that we can't lower the rates if inflation is above 2%. So there's definitely a battle going on, but I do think that he made the right call right now for not raising rates. It just doesn't make any sense.
Now again, if the U.S. economy is running efficiently, if the U.S. is not taking on a deficit every year, you want high interest rates. You want maybe not too high. You don't want 20% like in the 80s. But if the economy is doing well and the stock market is rising and people are employed, you want that interest rate to be higher than the inflation rate because you want people to make money when they lend and borrow.
Well, and also,
yeah, go ahead.
Also, with inflation sitting at quote 4%, which I laugh at. I mean, first of all, we got to realize this is why. Like, okay, so it's down to 4% more than it was, a year ago, and then a year from there, and which in reality is 100%. There are so many items that are over 100% inflated, and I'm talking about everyday items. Going to the grocery store and whatnot. But let's just leave it at, let's just call it 4%. That's fine. When it's sitting that high, and you start stimulating the economy, and you start giving access to money easier, well, then that, no matter how prices are inflating to, it's still going to propel people to spend more, which is going to increase inflation. So he can't drop the rates. And then every time he has, the bond markets have not reacted favorably as well. So, and Tone, I can't remember if we've discussed this on the show or not, but I have an opinion. This is just an opinion that I hold, that Powell has actually done a pretty damn good job spinning the plates without breaking anything. Because
no, he did break. He broke something. He broke 3 banks and put them out of business.
Well, that's fair. That's fair. Really quick. So here's a quick question. What do you think the probability is? This is just total pulling a number out of your ass. What's the probability that rates get cut the next time?
I would say less than 40% chance he'll cut them next time. But the time after that, at some point this year, he'll probably cut the rate. At some point in the first 3 to 4 months of the year, he'll cut the rate.
I actually think it might happen in Q1. If you just kind of look at the Federal Reserve liquidity cycle, there is a cyclic movement to it. And the way that it generally works is Q1 of the post-election year becomes QE. So I think he might. I don't know about this next time. I'm gonna put closer to a 50% probability he does, based on current information.
Well, you're way higher than the market. The market thinks it'll be 23% chance that he's going to cut the rate, which agrees with me when I said less than 40.
Well, that's my opinion. My opinion is that the rate should stay the same. But what I think is going to happen is small cuts.
This next rate cut is actually 2 months from now, which is kind of far away. Now, see, this is more interesting. So if you include the next 2 together, now we're looking at a greater than 40% chance that he's going to cut the rate between either in March or in May. I think he's going to cut in May.
In May. We just lost your audio real quick.
Do you want to go back to your charts? Is there anything else you want to show? Otherwise, we're probably going to call it a day soon.
I'm ready to wrap it up, but I did want to show you this really quick. So there's all kinds of drama and saga and stories and narratives around Nvidia, which, as you stated, Tone, Nancy Pelosi, she statistically did uphold her reputation as being the greatest trader in Senate history, and she beat the inverse Kramer trade by a smidge. But I think she was up like 50% this year, something like that. And then there's some news, there's some hubbub around Twitter, X, that she sold the top of Nvidia right before this AI. But now I am always a proponent. I'm never going to walk down from this statement. I'm always going to stand on this hill that states that the charts tell you what the news is going to be. Always. And so, that being said, I do have the Nvidia chart pulled up on the weekly time frame. So there's some really key things to look at here. This was the 5.618 extension, and basically Nvidia has lived there from throughout the summer until now. And it really has not been able to breach it with more than just one weekly close above it. So if you're not selling the 5.618 extension and taking some profit off of some of these runs, you're doing something wrong. I guarantee you I will be selling Bitcoin if it happens to run to the 5.618 extension, which I think that's it's over 400,000, I think. But here's something to watch now. So I'll zoom in, and I don't need the number. I don't need these anymore. So this price range of, as we can see, now the yellow and the orange have rolled over, and this is the 80 EMA and the 21 EMA on weekly. If the price, what this chart is telling me now is that if the price is not regularly closing weeks back above $135, then this cross is going to take place. This is a bit of a death cross on the weekly chart in traditional markets, not necessarily on crypto. But let's just take a look at the last time that happened. We have to go all the way back to 2022, and this is what I think might happen with Nvidia. This is a run, basically starting from these lows in August of 2019 at $3.83, and it ran one major correction, two major corrections, maybe three or four slight corrections. But the point is, even throughout this mess, with a couple of weeks closing below the yellow 21, the moving averages didn't cross bearish. Right here is where they did, and this was a bull trap. This is something to watch out for with Nvidia right now. So the moving averages crossed. This was February of 2022. The price was around $25. It dipped down to 20, swung up to $28. The crosses set themselves up bullish again, and then price plummeted through there. So what would that look like now? It would be a swing above 135, maybe back up here to 142 to get people bullish again, and then a reversal. Another way to think about it is, like, look, back here where this cross is bearish, I want to see 3 opens and closes above, at least 3. Not, this was just 1, 2, 3 closes above the cross, but it wasn't 3 opens and closes. Had this candle here in April of 22 been able to hold, then it was possible that Nvidia would not go into this strong downtrend. And then we had the DeepSeek fake news, and then that allowed for a bounce in Nvidia. And then I recently saw that. What did you see the AI story today, Tone? Alibaba had AI that was better than DeepSeek. Did you see that or no?
I didn't see it, but I'm not surprised.
Okay, so yeah, that's just the news. That's just the news. Getting the prices to where they need to go, keeping the markets efficient, shaking out retail investors, making people lose their money. Just follow the charts. Like, the news doesn't matter. Overall, yes, the overall fundamental news does matter. Like, Bitcoin is bullish because of how it's set up structurally and fundamentally. And Nvidia made this run here, this years-long run, from these lows in 22
Hey,
to
Mark.
this high. Yes.
I was going to say, more importantly,
Yes.
do you think the bottom is in for Nvidia on this drop? Because I don't think it is.
I don't think so either. I really don't. So I'm looking at this as a potential Wyckoff distribution pattern, and I know you don't like those, and it's not textbook.
No.
But these two spikes right here is November 2024. Let's see what the volume looks like. Yeah, that's pretty good volume there, but the volume on the spikes, that's decent volume. I think it's possible that this runs. I think this might be done for a while. That's just my personal opinion. I have to look at Nvidia closer. This is a really easy look right here. This is just going back to the 2-week chart, the same moving average as 821. It's in a buy. Let me put it to you this way. One of the things I studied with Nvidia is that this was a buy zone, based on a couple of things I was looking at, not just these moving averages. And it's very easy to manage because you would just set a stop, like maybe depending on how liberal you want to be. Well, this is an area of support based on several things at $120. And now we've got a swing low, so you can actually set a stop a little bit slightly below there. You can maybe get a little bit more liberal and go below this close, but that's getting into a bigger loss. So I do think that it is a buy, and it's easy to get out. Just get out if these swing lows are taken out, because it's probably going much lower. And what was the other? Oh, here's the other thing, Tone. Kind of jumping around right now. Tone, tell me you love to see this.
I love it. It's amazing.
All right, I'm going to put my drawings on.
One of the greatest charts in the history of humanity. The Ethereum will finally go to zero.
You and I have opposing views, because I still think this thing is going to bounce. I do.
No, it's not. No, it's not.
You might be right. We'll take a look. We'll take a look at the dollar value in a minute. But I don't remember what chart I had. This was a 2-week chart. I think I probably had this drawn more realistically on like the 4-day or the 3-day, or maybe even it was weekly. But it doesn't matter. These horizontals are pretty key. And it's amazing how dominance respects TA. It just does. It just does. I refuse to believe that it doesn't. I've studied it for too long. And what we're seeing right now is this is a key horizontal support that goes all the way back to at the minimum back to 2021 in February. So at least 4 years. And if these lows are taken out, well, then that starts to open up all of this mess down here. 0.025, 0.02. I thought that ETH, I thought this might have been a bottoming candle right here on January 19th. A nice strong bounce off of really key support, but yet we're just seeing whenever now I'm on the daily chart, whenever the orange EMA is resistance, it's just weak as fuck. Like, that is just a weak ass asset, and I would have no interest in it. I wouldn't even want to catch this knife. But really quick, let me just look at the USD chart, because there is, I mean, maybe this is stretching it a little bit. There is a bit of a massive, like, inverted head and shoulders.
You're stretching.
I know. Just humor me for right now. Just humor me for right now. And the right side is actually giving a falling wedge. Almost acting like a cup and handle. I know that I'm stretching, and trust me, I'm not like trying to make an argument for Ethereum in any means, but that is there. That is there. And there are some key prices that it has to get to. I've got this devil drawn up here because it's.
By the way, if you want to see another beautiful chart, take a look at BTrash. BTC is about to close at a brand new all-time weekly closing low.
Oh yeah. Yep. And that last low goes back to June 2023. What about LTC? So Tone, I have not looked at this in a long time. I drew this probably. This has probably been drawn for a couple of years. It's followed this path nearly perfectly. That's crazy. yeah, it was in a potential falling wedge, and now it's just back into this descending channel. And it printed new lows in November.
One more halving, and I think Litecoin dies. I think it only has one more halving. I think Litecoin is going to die in the next 4-year cycle.
So I guess we got to talk about this a little bit.
Yeah, because Litecoin, it will just die. It'll be, and the reason it will die is because if it continues to drop like it's been dropping 80% after every halving, after the next halving, it drops another 40, 50%, and it becomes completely useless to mine. Its mining structure would collapse, and Litecoin would just stop functioning because no one is going to mine it because it's worthless.
So this is Ripple, which has broken out of the trend line. But again, I would not be surprised to see this roll over and do just what LTC did and start trending down this line. But this is a key breakout. So with a higher high, these highs from the 2022 have been taken out and closed above. But it's all the Ripple, it's all the centralized Ripple narrative bullcrap that's driving this. Like if you actually, Ripple has basically just been done nothing versus Bitcoin for years. It's had a couple of roads. Doge bullish-ish, but not really. Again, so here's a great example of what I could possibly see Ripple doing, just stair-stepping down this trend line once it finally falls.
No, if you want to see what the future of Ripple looks like, open Shiba Inu chart.
Versus Bitcoin?
Yeah. SHIB BTC. You'll see a big pump in early 2024, and look at it now.
Yep. Yeah. Guys,
so Shiba is hitting new all-time lows. I don't need to tell this audience what it means to hit all-time lows.
Everything trends to zero against Bitcoin. It's just math. It's just how the math works out. And you know, did you see the tweet Brian Armstrong put out about how there are over 1 million coins released?
Yeah, because of fucking him. Yeah, he's the reason why there's over 1 million coins.
Yeah, and I didn't even know this. There's like 35 million in existence or something like that. Like it's insane. It's.
And I still have people messaging me is like, Tone, I'm creating a coin with my name on it. It's going to be great. And I'm like, who are you? Like, people are just silly.
Well, you know, there was a great. I used to watch every Andreas Antonopoulos video I could absorb and come across on YouTube. He's just such a great educator, and I heard him in many videos say, "Listen, everybody's going to have a coin. You're going to be in kindergarten classes, and they're gonna learn how to create a coin, and they'll be trading them with each other, and you know, here is that idea playing out in the real world much sooner than I actually thought it would have happened. But
well, now that Trump's doing it, everyone's going to be doing it, right? And it's interesting that Solana didn't really move much, and considering Trump coin was on Solana, dude, they're all going to die. All right, I think we talked shit coins enough. Hopefully ADA dies sooner than the rest. Yeah, these are pumps because, you know, he claimed that he's going to be like an advisor to Trump.
mm-hmm.
Whatever the hell this is, it's at a new all-time low. Anything that hits new all-time lows is a total disaster. and Bcash is hitting new all-time lows. It had a lower swing, but we're about to get a brand new low close, which is terrible for the shitcoin.
Yep, that's all I
All right,
got.
guys. We're gonna call it a day. Let me stop my screen share. I like the new platform. I don't know why I'm coming in blurry. I gotta figure that out. And hey guys, jump into Mark's Telegram channel for signals. Something new that he's trying out. And yeah, I'll see you guys there. And Mark, we'll try to have you on again next week. I was supposed to be in El Salvador for Plan B. I didn't make it. Just too much going on. Super busy with the financial summit and stuff. Guys, we have about 10 villas left. Let me drop the QR code for a minute, and that's the last screen share I will do once I do this. So check it out. Come join us. We still have these villas with pools and some without pools. Really, really awesome event. Mark, still trying to convince Mark to come out to the Maldives. I know it's a bit far for him in the US to come down there. But yeah, think about joining us. It's going to be an awesome event, as it usually is. You can check out the highlights from prior events. This is the Bali one. It was awesome. There's Sammy Loyal, Mike, and good friend Fa. That's Eunice. She also has a YouTube channel. And there's Matt McGregor. There he is. Liga Crypto. Man, so many Tizen. This was the place we had, and Maldives is going to be even nicer than this place. So come join us in the Maldives, guys. You will not regret. You won't regret it. Trust me. All right. And on this note, we're going to call it a day. Let me end screen share. And Mark, say goodbye.
All right. Bye, all.
Bye, guys. Let's see. All right. Going to hit the end button.